explain the inflation problem in India, because a large part of it is embedded in food inflation. And so how do we kind of unpack the story to understand where we are structurally headed as far as inflation trend is concerned?
Yeah, thanks for having me. So, look, I think it's a little troubling print still. It's still 5.5% inflation. It's lower than 6.2 last month, but it's still way higher than the 4% target. So we're in the right direction, but it needs to go a little more lower, before we feel like, things are under control. I think what's really happening is that, we've had back-to-back climate change weather shocks. We had heat waves, we had volatile rains. Now the reservoirs are full, but the temperatures are playing truant again. We had a winter which set in a little later than was expected. So food prices haven't started that descent which a lot of people had thought would happen by now. And we're really struggling a little bit with that. My sense is that if we see good winter temperature over the next couple of months, and winter extends a little bit because it started late, so we have all of March, which is quite cool, then we could start seeing food prices fall quite a lot. We haven't seen that yet. But the good news is that we are seeing core inflation, which is pretty low. It's at 3.7%. We are seeing oil prices, which are much lower than before, and energy inflation is in the negative. And my sense is that the central bank has enough for now to at least give the first rate cut.
In February?
In February.
25 basis points.
25 basis points.
So that's the whole problem, right? That core CPI, which is ex-energy, ex-food, is well below the RBI's comfort target. And so to that extent, do you think that the RBI has kind of been a little overcautious in not cutting rates thus far? Because the view we get from the market is food inflation, either ways, cannot be handled through rates. It's a completely different story, right? And also food inflation is a state matter. Food is a state subject. And so do you think that there is fair reason to say that maybe there's been some miscalculation over here in terms of cutting rates, and maybe we waited a bit too long to actually cut rates?
Tanveer, I don't really think so. The truth is that the inflation print last month was 6.2. It was above the upper tolerance limit of the RBI. It would have been rather irresponsible to start cutting at that point of time.
That was with food.
Yeah, that was with food, but food is a part of inflation, and RBI is an inflation targeter. Food has very important second-round effects. If you don't let it, fall, then it can seep into core very easily. One of the big reasons that core inflation is low today is because the RBI has remained so hawkish throughout the whole period. So the second round effects from food to core have actually been completely taken away, by the RBI hawkishness. So it is very important for the RBI to remain hawkish at a time when food inflation is very high. So I don't think it has miscalculated so far, but I do think that the fall that we saw, in yesterday's print from 6.2 to 5, and if winter crop is going well, then food inflation could fall more, gives us enough room to start easing rates, and we're expecting 25 basis points rate cut in February and then again in April.